got to talk gold, because you're a big gold fan, pointing out how much, if you had been holding it in your portfolio since 2020, it would have reduced volatility for you. But given where we are now, can we count on gold continuing to have that effect over the next 3 years?
Well, I think the main thing to remember about gold is non-interest-bearing money. And it's been impressive how much gold has held up in the context of long-term real interest rates rising 300 basis points. Now, they might rise a bit further. That might be a bit of a drag on gold from there. But eventually, you're going to have a situation where the Fed is going to have to deliver easier monetary policy. And holding gold in your portfolio may prove to be even better than holding treasuries because of that sensitivity and benefit when real rates start to fall on the backside. So from a strategic asset allocation, gold is really beneficial because it basically operates in a way that's very opposite to what stocks do.
What do you make of the impact of the drop in oil prices?
Well, it's hard to suggest that there's been a big macroeconomic driver causing the oil price market to move so swiftly downwards. And so what it's looking like is more a paper sell-off, where I think in some ways people are inferring from the bond market and the yield moves that are happening in the bond market that we're having a negative growth environment, and then that's translating somewhat mechanistically into the oil market in futures positioning and paper positioning. I think the challenge with that is that the reason why we're getting the move down in the bond yields is because people are expecting easier monetary policy, right, which should actually be beneficial to growth over time. And so I think people are looking at sort of a traditional intermarket action dynamic and not recognizing the actual fundamental cause of that bond yield move is actually supportive to oil rather than detrimental to it.
So you don't think oil goes down much further, it sounds like?
I think there's a real opportunity here in terms of from a skew perspective. As we know, OPEC Plus is meeting shortly. They've already taken 1 million barrels a day off the market. If this oil sell-off gets any further, you have a combination of OPEC pulling more supply off the market, plus eventually we might have the SPR come back online and start filling it back up, both of which basically put a floor on where you are on oil prices. So I think from a skew perspective, still looks good. If you're going to buy a cheap growth asset in your portfolio, better to buy oil than to buy stocks at these levels.
All right.